The worst is yet to come. That is the message from Credit Suisse. Nice uplifting message from those guys. Today I want to talk about what's happening with the dollar index, what's happening with the S&P 500, some of the things that are continuing to break around the world, and of course, what is happening with Bitcoin. My name is Lark. I make videos on investing. If you like that topic, make sure to subscribe to the channel and leave a thumbs up on this video if you like this kind of content. Now let's get into it. And let's start off real quick by taking a look at the DXY, the dollar index. Currently retracing it a bit after hitting 114.8 the other day. Maybe we see it come down and do another test of the 50-day exponential moving average. But so far, for a very long time, all we have seen is basically pumps up, retests the 50-day EMA, new pump, retest, etc., etc. So until we really close significantly under the 50-day EMA, potentially even really want to see it closing under the 100-day EMA, I don't really think we can start counting the dollar rally to be over. It has its ebbs and tides, but overall, maintaining a lot of strength, crushing Forex all around the world as it continues to rally up. Now, what's interesting is that today we see the DXY dropping, but also we see the stock markets dropping. Usually we've got a bit of a reverse effect going on here, but we do see the S&P 500 still just sitting right at damn support, so close to losing that. We've had 2 wicks under this key area of price support here recently. Daily candles have maintained above it. Let's hope we can see that continuing to happen, but this is the warning from Credit Suisse. The worst is yet to come. Euro area and UK are in a recession. The USA is flirting with one. Yikes. Of course, they are particularly saying that, well, central banks are going to continue raising rates as economies are facing recessions, right? Which is exactly what we've been seeing. Economies around the world are at risk as central banks are forced to mercilessly tighten economic policy to slow down inflation. Yeah. It's a tough economic situation right now. And look, the bad news just keeps coming in. Kevin Svensson, he pointed out over here on Twitter, inflation in Germany was expected to come in at 10.2%. It came in at 10.9% this morning. It is running damn hot. That's big inflation for one of the world's biggest economies, right? Germany is an economic powerhouse. 10.9% inflation in an economy like that, it is crushing. Absolutely crushing craziness. And the fact that it came in so much higher than expected really shows the situation that is going on in Europe right now. And as he says, what follows up is something he can't even make up. Germany agrees to a 200 billion euro package to shield against surging energy prices. So that is the solution. Inflation's going crazy. Just dump money into the economy. Now that money dumping into the economy, bringing lots of cash in, as we're seeing, the Bank of England, as we talked about yesterday, they're buying up bonds again, a $65 billion bond buyout program to stop pension funds from going under. We see Germany throwing 200 billion euros at energy prices. This money is not coming from a savings account, right? This money is coming from money printing and debt and all this craziness, and it's unsustainable. Now, maybe we get enough of all this happening, enough intervention in markets, enough money printing, enough bond buying, enough helicopter money to people that we do actually flip around for maybe a bullish end to the year before everybody realizes, hey, all this money printing is not fixing the problem. Also, as Chris Berniski points out here, markets must be addicted to something unhealthy to have all these high-profile interventions. That is money printing, of course. And he is pointing out this tweet right here, that China also intervening in markets. He says a sudden currency appreciation countering the depreciation earlier in the trading session, and before that, quite a weakening foreign exchange market overall. So we're seeing a big change in the yuan here as well. So it's happening everywhere. It's happening everywhere. All the central banks are addicted to cheap money. All the central banks keep on printing. They keep throwing money at these problems, and it just keeps not working. It keeps making the problems worse. So it might work in the short term, but long term, you just make everything that much worse. Now, before we get into talking about Bitcoin, just a reminder, if you don't have an account yet over on Bybit, is the best exchange for longing and shorting Bitcoin, Ethereum, Matic, all of the top coins. 0% fees on all their swap pairs, 0% fees on their market makers for futures markets, and up to $4,450 in deposit bonuses. So go ahead and check it out using the link down below in the description. Now, The bear market, it's a very interesting situation because I feel like, to some extent, that we're so bearish right now. Everyone's just uber bearish, right? Everyone's just freaking out, losing their minds, like everything's collapsing. And look, the macro scene does look very bad, and we've discussed this at great length. But how funny would it be if all of this bearishness is kind of that sentiment that maybe everyone's overly bearish right now. Maybe we do get our Uptober finally coming in. Let's all pray to Satoshi, the father of Bitcoin. Maybe he will deliver us an Uptober, right? Maybe that, of course, that idea depends on the S&P 500 actually putting up here and doing a decent rally, because I don't think we're going to have a significant move in Bitcoin until we see equities rallying higher. Now, there's always the chance, obviously, there's always the chance that Bitcoin just breaks away. We are very close to this downtrend line right here. Maybe we bounce off it, go down with everything. Remember, Credit Suisse, the worst is yet to come, right? Maybe we go higher. Maybe Bitcoin breaks away. Maybe it's one of the asset classes that people go, hey, everything's bad, let's all buy Bitcoin. It's always possible, of course, but right now, we are seeing Bitcoin butting again into price resistance here around $19,400. So still just stuck in our range. And it's amazing how typical this is in a bear market, where you just get these ranges that establish themselves for days and days on end. Price just basically trading sideways. Markets are very weak at the moment. We're feeling rather directionless in the market at the moment. Obviously, we'd love to see some great pumps come in. We'd love for Uptober to be real. But then we got all that macro stuff happening. There is extreme fear in the markets, and things are breaking, or at least threatening to break. And as I said, maybe that means we have to have enough central bank intervention into markets that things will get better. But that only kicks the can down the road if they do. How long that can be kicked down the road, that's anybody's guess. But until I think we get some better direction from the macro scene, from what particularly the equity markets are doing, I don't think we're going to see any grand moves here for Bitcoin. So that is what we are watching at the moment. Anyway, let me know what you think about all this stuff down below in the comment section. Thanks so much for watching today's video, and peace out till next time.